Bitcoin, the world's leading cryptocurrency, has recently taken a hit. After reaching an all-time high of nearly $100,000, the price has dropped by 8%. This sudden dip has sparked debate among investors. Is this a temporary setback or the start of a downward trend? The answer remains uncertain. Market analysts are closely observing Bitcoin's next move. Some see this as a healthy correction after a period of rapid growth. Others worry it signals a loss of momentum. Only time will tell what the future holds for Bitcoin. One thing is clear, the cryptocurrency market is known for its volatility. Investors should proceed with caution and be prepared for potential fluctuations. This recent dip serves as a reminder of the risks associated with cryptocurrency investments. However, it also highlights the potential for significant returns. As with any investment, careful research and risk management are crucial. The sharp drop in Bitcoin's price has triggered a wave of liquidations. This is a common occurrence in the leveraged cryptocurrency market. Traders often borrow funds to amplify their potential profits. However, this strategy carries significant risk. When prices move against them, these leveraged positions can be automatically liquidated. This means selling their assets to cover their losses. The recent liquidations have added further downward pressure on Bitcoin's price. This highlights the interconnected nature of the cryptocurrency market. Movements in one asset can quickly impact others. Despite the liquidations, some investors see this as a buying opportunity. They believe that the market has overreacted and that Bitcoin is poised for a rebound. Bitcoin miners play a crucial role in the cryptocurrency ecosystem. They use powerful computers to validate transactions and secure the network. As a reward for their efforts, miners receive newly minted Bitcoin. Recently, there has been a noticeable increase in Bitcoin miners selling their holdings. This has led to speculation that they are contributing to the downward pressure on the price. Miners have significant operating costs, including electricity and hardware. They may be selling their Bitcoin to cover these expenses or to realize profits. It is important to note that miner selling is not necessarily a bearish signal. It can also indicate a healthy market where participants are taking profits. However, the current level of selling activity is worth monitoring. The cryptocurrency market is witnessing a tug-of-war between institutional investors and long-term holders. Institutional investors, such as hedge funds and asset managers, have been increasing their exposure to Bitcoin. This institutional adoption is seen as a positive development for the cryptocurrency market. It brings in more capital and legitimacy. However, it can also lead to increased volatility. On the other hand, long-term holders, also known as hodlers, tend to hold on to their Bitcoin for extended periods. They believe in the long-term potential of the cryptocurrency. The recent price drop has tested the resolve of both groups. Some institutional investors may be tempted to sell and cut their losses. Meanwhile, long-term holders may see this as an opportunity to accumulate more Bitcoin at a discounted price. Section 5. Finding the bottom historical patterns, offer clues. Predicting the bottom of a market cycle is notoriously difficult. However, historical patterns can provide some insights. Bitcoin has experienced several boom and bust cycles in its relatively short history. Some analysts believe that Bitcoin could bottom out around $82,500. This would represent a 17% correction from its all-time high. They point to similar corrections that have occurred in the past. It is important to note that past performance is not necessarily indicative of future results. However, historical patterns can help us understand how the market has reacted to similar events in the past. Section 6. Deciphering market sentiment. Options traders hedge their bets. Options traders are closely watched by market participants. They use complex financial instruments to speculate on the future price of Bitcoin. By analyzing options data, we can gain insights into market sentiment. Recently, there has been a shift towards a more neutral sentiment among options traders. This suggests that they are less certain about the direction of the market. The put-call ratio is a metric that measures the balance between bearish and bullish bets. A rising put-call ratio indicates increasing bearish sentiment. Conversely, a falling ratio suggests growing bullishness. Section 7. Election uncertainty, a potential factor in Bitcoin's future. The upcoming U.S. presidential election is creating uncertainty in various markets, including cryptocurrency. The outcome of the election could have significant implications for the regulatory landscape. Some candidates have expressed support for cryptocurrency innovation, while others have voiced concerns. Investors are closely watching for any policy pronouncements that could impact the industry. It is still too early to say how the election will ultimately impact the cryptocurrency market. However, it is a factor that investors should be aware of. Section 8. The Road Ahead: Navigating Volatility in the Crypto Landscape. The recent price drop is a reminder that the cryptocurrency market is still in its early stages of development. It is characterized by high volatility and significant risks. Investors should approach the market with caution and a long-term perspective. It is essential to conduct thorough research, diversify your portfolio, and only invest what you can afford to lose. Despite the volatility, the cryptocurrency market continues to evolve and innovate. New technologies and use cases are emerging all the time. The future of cryptocurrency remains uncertain, but it is undoubtedly an exciting space to watch.